Hi, this is Daniel, and you're watching Unrivaled Investing. This is a no hype, mission focused channel trying to find you exceptional companies and unrivaled investments. I'm looking for potential multi baggers, folks, types of stocks that could potentially go up hundreds or even thousands of percent over time. Today, we're talking about Trulieve, a cannabis multi state operator, and a lot of folks look at their exceptional financials and think, hey, this is potentially a multi-bagger. This is potentially a cheap stock that has a hyper growth, long runway ahead of it, as a lot of folks are rah-rah about cannabis stocks. I see too many red flags. This is personally, for me, on my personal journey, too hard. And this video is going to call out, sort of walking through what you see with Trulieve along with the red flags and why it's on my personal journey I am going to be avoiding Trulieve. Now, this is not a recommendation. Everyone has to figure out their own journey and what they want to do. But I'm hoping that if you don't know about these things, you learn from this video, these potential red flags. And in full disclosure, I don't have any skin in the game on this one. I don't have a short position. I don't actively short individual companies because, look, I don't want to bet against someone else's journey. So I'm not doing that. But what I am calling out in this video are some red flags that I find to be quite concerning, despite the fact that it looks optically compelling. So let's dive right in so that way you can understand what I see. Let's start off with the thesis in terms of what's going on here. So you understand what you're looking at here is Trulieve, TCNNF, or TRUL, which trades on the Canadian exchange, a top performing multi-state operator. That's how they describe themselves, multi-billion-dollar cannabis player. And they talk about, from their presentation, talking about providing the highest quality products, premier national brands, cherished local brands, and you're talking about starting off medical marijuana and then moving into recreational marijuana. And they also recently announced a multi-billion-dollar deal with Harvest, which expands their footprint throughout the United States, talking about if you listen to Kim Rivers, the CEO, she'll talk about how it helps expand, from their western and northeast presence, and it fits into their sort of hub and spoke model that they're talking about. I don't quite get it, but that's what they're pitching over here. And what gets a lot of folks excited as they look at this is they say, hey, I'm looking at a company that's growing quickly and the valuation keeps coming down. Now it's trading around 6 times price of sales. Valuations come down quite a bit just over the last few months. So is this potentially a bargain? And that's what a lot of folks are thinking, especially when they see the very pleasant opticals. You're looking at revenue increased by 5x in 2 years, from 100 million to over 500 million, and profits increased by 6x over 5 years. This is net income, folks, that they're claiming, going from 11 million to 63 million. So this is getting a lot of folks, especially a lot of retail investors that, this is maybe their first time looking at stocks, first time buying stocks, saying, hey, this is exciting. Maybe you get some, different folks promoting it, saying, hey, this is a great company. But you're just looking at the optics. You maybe have to dive in a little bit deeper, and we're going to talk about that in a second, because maybe it's cheap for a reason. Quick plug before diving into the reasons why it's potentially cheap is this: if this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. If you want to follow my personal journey as I look for potential compounders, look for unrivaled investments, looking for potential multi-baggers, go to unrivaledinvesting.com. First week of the month, I call out my full portfolio. By the end of the month, I call out at least one potential multi-bagger, types of stock that I think can, has potentially hundreds of percent upside over time. And look, we're building an exclusive Discord community where we can share thoughts, push back, given thoughts. I started sharing part of this thesis earlier, sort of saying, hey, what am I sort of missing here? And I didn't really hear back from anyone sort of saying, hey, Daniel, I haven't heard, I can't argue with these points that you're about to hear. So let me get into it right now in terms of what are some of my concerns or the red flags that I'm seeing. But before getting straight into Trulieve, one should understand a little bit about my background. I previously worked, I've been fortunate. I've worked several jobs on Wall Street. My most immediate was working effectively as a CFO for a fast-growing payments company. Before that, I worked for a multi-billion-dollar long-short hedge fund, and that means not only trying to find potential compounders, but also finding companies that you want to bet against. And one book that I really enjoyed back when I was in college, when I was learning about stocks, was creative cash flow reporting over here. You could also see the picture. But the main lesson from that is that what you'll see consistently with companies that may misrepresent their financials. Keep in mind, I'm not saying that's what's happening here. I'm saying this is something to be mindful of for companies that potentially do it, is that there's a disconnect between what you see on their income statement and what you see with their cash flows. And cash is generally relatively easy to audit unless the numbers are just completely bogus. And so that's the reason why it's, you take whatever the net income figure is and then you walk through to what's your cash balance, or how come the cash balance change doesn't quite match up to what you see on the income statement. And that's oftentimes manipulated by previous fraudsters, where maybe they'd say, hey, we had this great net income figure, but reality is it was just this crazy artificial accounts receivable that went way up, and you didn't actually collect that, but they're booking it as revenue and profits. But on the cash flow statement, you're going to see, wait a second, that cash didn't actually go in. So there's routinely a disconnect between what's reported on the income statement and what you actually see on the cash flow. So I'm very interested in looking at the cash flow statement, trying to understand what's sort of the bridge between what you see, what you just saw with that incredible income statement figures that we saw looking at Trulieve, seeing their net income increase by 6x over 2 years. So let's actually dive in a little bit to that. So as we look at Trulieve's results, you see once again their net income going from around 11 million to 63 million, but their free cash flow has been hugely negative during this entire period, where you could see that, for example, in 2020, they generated operating cash flow of 100 million, but then you have to think about what it's offset by. But they're making huge investments in property and equipment and construction. Okay, so really their cash burn, so it really wasn't net income of 63 million, it's really cash burn of closer to 40 million. And you see the same behavior over here in 2019 and 2018. And that's when you go, well, Daniel, maybe this doesn't really matter, because, they're making huge investments into their growth, and they're clearly growing a lot. And you want to invest in your retail presence. You want to grow, invest in your harvesting presence, and you got a lot of construction and property. There's a lot of property and equipment that you're investing in. So that makes me ask, okay, so maybe that's a reason why there's a big difference between net income, property, and free cash flows, is because they're making these huge investments in property and equipment. So that's something I want to explore, like what's actually going on here. And so then I look on their annual report under properties, item 2, I believe this is page 43 of their 10K. They talk about how we have no material properties. I'm like, what? Wait a second. This is the main reason why you're cash flow negative for the last few years, despite the fact that you're reporting these huge, profit figures. So I'm starting to go, okay, so maybe you're a little sloppy with financials at most. I don't distrust your financials. Maybe this is just a slip. I don't want to be a hanging judge here, but seeing that where they say we have no material properties, at the very least, you could have taken a little more time to show what are all your properties, to sort of say, actually, we've made, quite sizable investments, and that's where all of our cash is going to. Because clearly in their investor presentation, they talk about all sorts of properties that they have, 83 dispensaries in Florida, and this other huge property in Jefferson County, Florida, which I indeed have confirmed looking at Google Maps, like, oh yeah, it's really there. Okay, so that's weird for them to talk about no material properties when clearly there are a lot of properties. And then I start seeing more ugly optics, and so the property stuff was just weird. Maybe you can't trust the financials, but then you start seeing other optics as you start Googling, doing a little basic research, and you see that the husband of marijuana MSO, Trulieve, multi-state operator Trulieve, CEO, faces trial on bribery charges. And that's like, uh-oh. Yeah, it's not necessarily saying that the CEO of Trulieve is on trial. This is the husband of the CEO, Kim Rivers. But maybe he's innocent. Maybe this has nothing to do with Trulieve. And then you see, oh, okay, so literally just a few hours ago, here's Kim Rivers, CEO of Trulieve. Here's her husband, JT Burnett. He was just convicted of 5 counts of a total of 9. So convicted on 5, found guilty on charges of extortion, honest services, mail fraud, a Travel Act violation, and lying to the government. This is starting to turn into very ugly optics. Okay, so then you go, okay, well, you know what? At this point, let me be 100% honest and straightforward with everyone. And that's what I'm trying to do here with this channel, is be 100% straight with folks. Is that at this point, there's no way I would personally be touching it. I mean, just the optics, just ugh. But look, everyone has to figure out their own journey, and I recognize not everyone has some people are willing to say, hey, I'm willing to buy something with maybe the optics don't look that great. maybe someone, has some close family that's served time, and they're like, you know what, it was a tough time in their life. They figured it out, and they just, you move on. And so that's, so I recognize there's a lot of people with a lot of different journeys out there. I'm just saying, when I invest, I want to find exceptional companies, unrivaled companies, and ideally, I don't even have to worry or think about these types of things in the morning. I want to wake up in the morning and say, what's my portfolio doing today? How are they compounding? Why are they unrivaled? I want to look at it and think about why they could be crushing it over time. And I'm looking at this and I'm starting to say, okay, I'm getting very uncomfortable looking at this. But it actually gets even worse because, do you ask, like, well, wait a second, is there actually no connection here to Trulieve? And part of the concern here is that it's literally come out how the now husband of Trulieve CEO Kim Rivers boasted about how a political connection helped the company obtain one of the first vertically integrated licenses to sell medical cannabis in Florida. Okay, so that was according to an undercover FBI agent conversation. And during the recorded conversation, Burnett talked about how, this is further in this article, where it talks about husband of Trulieve CEO bragged about medical cannabis pull. Burnett talked about working with then state rep Halsey Bashirs in 2014 to put little tweaks into the MMJ licensing criteria that would prevent certain competitors from qualifying. Now, I don't know if that crosses the line. I honestly, this situation is just so too hard for me. It's not going to be part of my journey, but it makes me concerned. If I were a shareholder in Trulieve, does this increase the odds? Does this make it possible that Trulieve loses their license because of something like this? Because, let's say, some sort of fraud, that, some sort of malpractice that resulted in them obtaining a license sort of by cutting out the competition, illegally cutting out the competition by having sort of in cahoots with the local politicians. And so that does create sort of catastrophic risk for this company. I'm not saying it's going to happen, but it does increase the odds that could happen. And then, okay, so you keep, they keep saying, well, wait a second, Daniel, the red flags you're calling out, it's uncomfortable optics, but nothing's really truly connecting it to truly the business and the operations. And this one is the final one that I would say, like, just blows all the rest away. That's even straight in their 10K. So regular investors who do your research, you should be able to see this stuff just right away. This is in the public filings, folks, where here it is. There is actually a direct connection, I'd argue, between Trulieve and JT Burnett, as they talk about how JT Burnett, the spouse of Kim Rivers, the chief executive officer and chair of board of directors of the company, is a minority owner of a company, the supplier. So this is JT Burnett, the husband of Kim Rivers, who's the CEO, and he is a minority owner of a company that effectively provides construction and related services to Trulieve. The supplier is responsible for the construction of the company's cultivation and processing facilities and labor, materials, and equipment on a cost-plus basis, i.e., they say, here's our cost, you pay us more. So this is a nice way to make sure you have a profitable contract. For the last 3 years, these amounts have totaled $97 million, $46 million, and $12 million, respectively. So I'm looking at this, and so then management tries to qualify it by saying, well, the use of the supplier was reviewed and approved by independent members of the council, members of the company's board of directory, and all invoices of the supplier are reviewed by the office of the company's general counsel. My view is that the CEO has direct sway here. She gets to pick ultimately who is the supplier, and there are literally dozens or hundreds of contractors available. So this is a huge conflict of interest. There is no reason that they should be doing this in the first place. This creates a huge conflict of interest that JT Burnett, this company that he owns, he's a minority owner, and could be getting a huge payout from these things. And keep in mind, this all ties back to this, which is, let's understand what's going on with their cash flow. And their cash flow, their major investment is in property and equipment. And so, this major investment, the reason why they're free cash flow negative, their cash burn, is because the vast majority of their CapEx is going to a construction firm that is partially owned by the CEO's husband, who's now been convicted of several different federal charges. So I look at this, and this is like, holy smokes, this is just way too hard. Could it work out from here? Maybe, but it's just personally, it's too hard for my personal journey. If it's on your journey, I wish you the best of luck. If this video has been helpful for you, you know, I hope you hit that subscribe button, hit that thumbs up button. If you want to follow my personal journey as I try to find, you know, solid companies that I'm excited to partner with over time, ideally companies with, you know, where management has a lot of skin in the game, you know, potential multi-baggers, go to unrivaledinvesting.com. And if you enjoyed this video, make sure to hit that thumbs up. Thanks so much for watching.